Hello guys, thank you for coming to this lesson. Today I'm going to be teaching you about structure. On structure we'll talk about trends, and I'll also talk about trend lines and support and resistance. So I'm going to try and make this lesson very fast so that we don't waste time. Okay, so structure. What is structure? Structure, we have the movement of the um, the market. Okay, so price moves like that, okay, or like that, or like this, or like this. Okay, right. Okay, so let me explain what this is. So market structure. So price doesn't move in a straight line, as you have seen on the charts. An example of a chart is this one, like this. So price never moves in a straight line. Price moves in a structure that is defined. Okay, so if we look at here, price is moved from here up to this point. That's the first move. Then it came down here. It also moved up there in this manner. Okay, so we call this a trend. If market is moving like this, it's called a trend. Okay, and if it's moving downwards again, it's called a trend. And if markets are moving to the side, it's called a ranging market. Okay, so let me explain that further. What is a trending market? So we have a trending market. Okay, so when a market is trending, it means price is moving in a defined sequence, either going up or going down. For example, if price starts here, it can trend going up and go down, up, down, up. Okay, so this is what we call a trend. When a market is doing this, it's in a trend. It's a trending market. And when it's going down as well, like that, it's also a trending market. So what do we mean by this? So if we look at this point, this is a low. Okay, this is a low. This is a low point starting here. So we can call this a low. So if this is a low, what is this? Definitely this becomes a high. Okay, so that's a high. All right, so the market moved from a low to a high point. Then what becomes this point? This point is now a higher low since it's higher than this low. So I'll put this as higher low. Okay, then from the higher low, the market moved up to this point, which is higher than this one. So it's a higher high. Okay, higher high. So that's that point. And this point is higher than this one, but it's still a low. So this is a low, this is a higher low, this is also a higher low because it's higher than this one. So we can label this higher low. Okay, then from this point the market moved up, so this is higher than this, so that's a higher high. Okay, this is very simple to understand. Okay, so that's a trend. It goes from low to a high, higher low, higher high, higher low, higher high. So that's an uptrend. So this is an uptrend. The opposite is true for a downtrend. This is high, as you can see. This is a high, and this is a low. We can't call it a lower low because we don't have any way to reference it. So for now, we just call it a low because there's no higher low here. Okay, then this becomes our lower high. This one, lower high. Okay, then this becomes our lower low. It's very simple to understand. And this becomes our lower high. This becomes, sorry, and this becomes our lower low. So we have a trending market. Okay, from a trending market we have an uptrending market and a downtrending market. Okay, that's all you need to know for now. Then we go to a ranging market. Okay, these are the types of markets we have. Let me just delete this. We have a ranging market. So a ranging market is when price is moving sideways. Okay, let me just delete this. When price is moving sideways, so it goes up and comes back down, goes up, comes back down, goes up, comes back down. No matter how many times it does this, it might do this a few times, but this is a ranging market. Why? Because it's failing to break the highs, okay, and it's failing to break the lows. So we call this a ranging market because it doesn't have any higher highs or higher lows that are defined. Okay, that's a ranging market. All right, so let's move forward, trying to explain this as simple as possible. Then we have what we call trend lines. Trend lines are lines that we join on our market candles that are progressing in a particular way. For example, if it's an uptrend, like that, okay, I'm sure you've seen me draw trend lines a lot. So a trend line is a line that joins the movement of the chart. Okay, so that's a trend line, and the other one usually is drawn on the top, moves like that. Okay, so that's a trend line. So let me just change the colors so it doesn't confuse you. Put that white, I'll also put this white. Okay, so these are trend lines. So you can draw them when the market is going up, the market is going down, or sideways. Okay, I'll teach you about chart patterns whereby the trend lines will show you a particular pattern that a market is making and how we use that chart pattern to predict the next movement of the price. Okay, so I've explained trend lines. Now we have support and resistance. Okay, so when market is moving either in an uptrend or downtrend, we have what we call support and resistance. Okay, so when price moves from a low to a high and a lower low and a higher low to a higher high, it creates market structure. So we call this a high, and we put a line right here. Okay, some put it as a level like that. Okay, like that. Okay, so when price comes here, it found resistance. It couldn't break here, so it found resistance over here. Okay, so this is resistance. Okay, because it failed to break up. Then it came down. When it came back, it didn't fail to break here. It broke through. So if price breaks a resistance, that resistance becomes a support. Okay, that resistance becomes a support. So price broke the resistance and it came back to find support here. So we call this support. Okay, so that's resistance and support. So price is moving in either direction, up or down. If it hits here and comes down, it means there is a resistance here. If it breaks through, if it's coming back to where it previously found resistance, it becomes support. That's why you hear people saying resistance turned into support. So this is an uptrend. If it's a downtrend like this, if it's a downtrend like that, goes up and there and touches here and goes down. Okay, so now price is finding resistance here and has come at support there. Okay, so in a downtrend, this becomes a support, and when it breaks it, this becomes resistance. It's the same concept, okay? And we can also define support and resistance in a ranging market. So if it's moving like this, bounces there, breaks and comes back to bounce and move up, it means price was failing to break this resistance over here, and when it broke it, it became support. So this can happen for a long time. Price can be bouncing here and go down. It means there was a very strong resistance, and if it breaks, it usually comes back to retest as a support to go upwards. So I'll teach you how to use support and resistance. Okay, then we have support and resistance defined in trending markets as a trend line instead of this horizontal support and resistance. So if price is moving like this, okay, then it breaks, it retests, goes up, we can define this line as support. Okay, we can define this trend line as support because it's finding support over here. So very good setups will be when the market breaks this horizontal resistance and finds support on that horizontal resistance and a support trend line. This is a very good setup to buy here and target probably these highs and swing it up. But you do not just enter here to buy because you've seen that there's a trend line and a support line. There should be candlesticks that will tell you that price is about to go up. I've sent you guys a book to read. Please make sure you read the notes that are in those books that I've sent to you. Okay, so this trend line that is above becomes a resistance because price failed to break here, came down, failed to break here, came down, almost came here and went down. So this is a resistance line. So if price breaks here, this resistance becomes support. Same concept with this horizontal line. So now I've explained what trend lines are, what support and resistance is. I'm sure now you guys understand the basics. Okay, these are just the basics. So for today's lesson, I want you guys to practice how to draw trend lines and how to draw support and resistance on the charts that you're going to be seeing. Okay, one thing that I would like you to understand about support and resistance is a valid support and resistance is where price has touched several times. So it can touch once, goes down, twice. That's a valid resistance zone. Okay, if it breaks and also comes and touches there and comes up and touches again and goes up, this is a very strong level. This is a very strong support and resistance level. Okay, same applies with the trend lines. If the trend line is touching at least 2 points, then it's a valid trend line. Okay, then it's a valid trend line. So you can draw your trend line from here to here. That's a valid trend line, and you can extend it going further like that. So that's a trend line. The bottom one can come from here like that. Okay, you can accommodate as many touches as you can. So that's a trend line. For today, I think this is what I wanted to show you guys. I'll plan on what I need to show you guys on the next lesson. So please practice identification of trends, of ranging markets, of uptrends, of downtrends, support and resistance, and try to start drawing trend lines. Then I'll see you guys on the next lesson and we'll see what we have. Thank you so much.